morning, how do you do, ladies and gentlemen? I'm your host, Seth Julia, and we are looking at gold, the shiny wonder metal that has amazed humanity for eons. Everything we want to be. Beautiful, malleable, immortal, everything we can't be. And so we love gold. And we personally have been invested, taking a long position in gold. Once it broke above 1852, right here. This is the Fibonacci Retracement. For those of you unfamiliar with this unusual indicator, and colorful one too, it goes from a high to a low, or a low to a high, depending. And it's only used in cases where you're trying to gauge the retracement of a price from a peak. And these lines, these color-coded zones, are not arbitrary. They conform to the Fibonacci ratio, which in this case is, you see this is the 23% retracement from that high, the 38%, the 50%. You see that the prices do stick at these various levels. It bounced off repeatedly this price level here, where it spent a great deal of time, I might add. Anyway, the point of the matter is this. As it sort of kisses and then penetrates these different zones, if it stays above them, these zones become support levels for a continuing trend upward, where the next Fibonacci retracement level becomes a resistance point. And the same thing occurs. If it is able to stay above that resistance point for enough time to make it look real, then it's going to continue further. And such has exactly been the case. Once it broke through the 50% line for us, and we felt that the position had legs, and as you can see, so too did the majority, the growing majority, I should say, of large speculators holding net long positions. And those are that's the crowd we want to follow. We don't want to follow the commercial hedgers. We certainly don't want to follow the small speculators, because they're generally wrong. So we can see that there's a lot of momentum behind this. Momentum is measured in volume. That's a term from physics that's applied to market behavior. As the volume goes up, it means there's more momentum, more sentiment behind the trade. And as you can see here in this decline, volume had fallen, meaning there's less sentiment. So this, having the stronger sentiment behind it, indicates that it's likely to continue, and I emphasize the word likely. There's risk here. These are the capital markets. You should not be trading with money you can't afford to lose. And because lose you will, we all lose. Everybody loses in this game. The idea is to win more than you lose. But let us not pretend that nobody loses. And so you need to understand the risks involved here, and this is speculation. We could be wrong. But if you look at this trend, you'd be pretty well secure by buying in here at 1852, or even at the 38 retracement level of 1800. So far, so good. So that's going to do it for now, ladies and gentlemen. The gold trade holding on nicely. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence, ladies and gentlemen. Khalas for now.